Quick disclaimer, these discussions are intended for education and informative purposes. They are not to be used as legal advice. Welcome to the 256. I'm JD, host of the 256 Investor Podcast. This is for both the seasoned investor building a portfolio of rental properties that wants to sharpen their skills and for the potential investor that needs to answer some questions and gain strategies to invest with confidence. We'll discuss all things investing, legal, tax planning, acquisitions, insurance, and of course, we'll discuss real life experiences with 256 investors. Whether you live in the 256 or invest from afar, this is for you. Hi, welcome back, everybody, to the 256 Investor Podcast. I'm JD here today with John Wood. John has been in the insurance business for the last several years. He is local to the 256. He's also an investor. John, tell us about where you are today, what you're doing, and your life in the insurance business.
Sure. So I started insurance. I left as an engineer, like most people living in this area tend to be engineers. I left that industry in 2018 and started an Allstate agency. From scratch, I did that for about 4 years. And towards the end of that tenure, I went back into engineering when everyone was remote. So I was doing both for a few months and then sold the insurance agency. And then about 8 months later, I bought out an independent insurance agency, which I still own today, and still work as an engineer, although I have been made into a silent partner in the insurance industry. So I'm not doing any of the day to day anymore. I'm just full time engineer at this point.
Okay, the first time I met you, I was holding an open house for a house I had for sale, and I think you lived down the street, and you kind of wandered over to the open house, and I was there with another team member at the time, and you asked a question that I'll never forget. This is why I always remember you, is because you said, "How is your company different than every other company?" And not many people ask me that, but that is the question that every consumer should ask.
Yeah,
And so I've always appreciated you just for asking that one question. And you were just starting your insurance company at that time. And I want to discuss today because it's always one of the first questions I get when I'm talking to a new investor. Of course, a seasoned investor would already be in the insurance game and kind of know what they're doing with their insurance. But for a new investor to the game, they at some point in the process, the question comes up, or either I will tell them, "What about your insurance?" Because they're going to have homeowners insurance. But if you're converting it to a rental home, what's that process like to convert it to a rental dwelling? What's the pros, cons? What should the homeowner do? What should they not do in that process?
sure. So that's going to be basically cancellation of the existing homeowners insurance. It's not something that you can just convert. Homeowners policies are designed for the homeowner in mind, and they're rated according to the risk of an owner occupying that home, those sorts of risks and liabilities. You'll have to cancel that policy, and then you want to go get a rent landlord policy, some companies call them, or a DP3 property, dwelling property three. Has to be a three because that gives you the broadest coverages that you're going to want. A DB3 tends to be cheaper than a homeowner's policy, which is an HO3 or an HO5, depending on carrier and coverages. Um, and They tend to be a little bit cheaper, and they're rated differently. The risks are different, such as like if I'm living in a home and my family's occupying this home, and my dog goes and they bites the neighbor, and the neighbor sues me or whatever. There's a certain risk and liability with that kind of scenario, as opposed to, if I'm renting out a home to another person, that's a different liability. They may have a guest over who injures themselves and wants to sue me, or and just things like that. So there's a different set of risks, there's a different set of rates and underwriting involved. So it is a brand new policy type. They do tend to be cheaper though.
At what point should the investor, and by investor we mean somebody who is living in this home, but they are moving to another home with the intention of renting out the home they've been living in, at what point should they notify their insurance company that they're canceling the policy and then they need to start a rental dwelling policy?
Probably on moving date. Um, that would probably be the proper answer. I think companies have grace periods, and I would say your risk in general kind of has a grace period. Like, let's say I move out and my house is going to be vacant for a month because my new tenant, my lease doesn't kick in for a month. I've got things in there I need to get out. I don't want to just move out suddenly because I want to take my time and not stress myself out, those sorts of things. I think as long as you have the renter's policy in place, either the day of or prior to your tenant moving in, you should be good. But if your house is going to remain vacant for a while, I would probably go ahead and convert, cancel, not convert, but cancel and begin the new policy because they typically have more coverage afforded for vacant properties than, your standard homeowner's policy. You're not supposed to leave it vacant as a primary. Or I guess you could take that homeowner's policy, you could convert it to a secondary home, which then it would be permitted to be vacant technically, without having any kind of trouble if you have a claim. So that's kind of what I'm focused on here. Like if I have a claim, what circumstances are going to be problematic if I don't have the right policy type? So what I just explained, I think covers that pretty well.
So you can't start a rental dwelling policy without having an actual lease in place, a signed lease in place.
I don't think that's true. It's a good question for your agent. They may not know.
Because I've always been told you're living in this house until you have a signed lease with a date and signatures because insurance companies don't want to see a vacant property.
I don't think that's correct.
Okay.
They don't want to see a vacant property. But there's more exceptions to a property being vacant on a DP3 than there would be on an HO3. Now, it usually costs quite a bit more. But there's typically when an agent is running a quote, there's a question early on in the questionnaire, is this property going to be, occupied or vacant? And some of them, if you put vacant, they won't take it. Underwriting will knock it out, but others will. And in those situations, it's probably the better policy type for a vacant home situation.
So you may be shopping around at that point.
Yeah, you're probably going to want to shop around anyway. If you find yourself in this circumstance where you're considering either a new rental property or converting your home to a rental property, you should probably be looking.
It's something you're going to do anyway.
Yeah.
What would you do in this scenario?
Yeah, I mean, just what I explained, I would probably go ahead and convert to a DP3, within a few days of moving out and, have it, may or may not tell them it's vacant because it is a lot cheaper if it's not, if it's occupied,
Sure.
Yeah, me personally, I probably would. I'd be like, oh yeah.
I mean, this is one of the standard questions I always get if I'm working with somebody in that scenario. So I don't know exactly what to tell them other than, in my experiences personally, I don't need to say the words completely vacant home when I've already moved, and I just kind of leave it at that. And they really need to shop around and discuss this with their agent. But it is a question I get every single time, and if I don't, I do tell them at the end of the conversation, by the way, you're making this move, you need to be prepared to discuss this.
Right, sure.
Once the home is occupied with a lessee, what is the difference between the owner of the property, the landlord, maintaining homeowner's insurance, and what is the difference with the renter having renter's insurance?
Sure. So, as the homeowner, of course, you want to protect your investment. That's one of the great things about the real estate asset class is you can buy insurance on your investment, which if there's some kind of loss or, if a stock crashes, there's no insurance for that. But if a home burns down, you can get all your investment back. I think that's one of the things that makes it unique and valuable. So obviously you're going to want to have that insurance in place to protect your investment. You also have a legal risk, that you could be sued in certain circumstances, and that insurance is going to provide you liability for that kind of thing. Additionally, I would probably say you probably want more liability than just what a standard DP3 will offer, such as like a personal umbrella policy or maybe a commercial, if depending on how your portfolio, the size of it, how you've got it structured.
General liability policy.
Yeah, GL, general liability or potentially a commercial umbrella policy, but GL is usually a good cover. So those are the types of risks you will run into as far as, the landlord. For your tenant, you absolutely want to make sure they have renter's insurance because, for one, they may cause some kind of issue with your property that would prevent you from having to use your own insurance if they have the right coverage in place. It just protects you more holistically. It doesn't cost them very much, maybe $25 to $35 a month. You don't really care about their contents coverage. You could, you don't have to put a stipulation on that. Oh, you need 15,000 for your stuff. That's going to make their rates cheaper. But you do care about that liability coverage that they have because, you definitely want at least 300,000. Probably you should force them to have 500,000 in liability. If they have a guest over, they got a Super Bowl party or whatever, and somebody injures themselves, there may be someone who's thinking, oh, I got an easy payday because I know this house is owned by this person who has, probably more rental properties, and they may try to go after you that. So by forcing your tenant to have, the right coverages in place, that's just an extra layer of protection, and maybe you won't even touch your insurance, because that's a good thing, because a liability claim is something that insurance companies really frown about. They don't like to see that stuff. Water losses, they don't like to see water losses. They don't like to see liability. They don't like to see theft. Basically, if it's a claim and it's not on property, and it's not some sort of act of God like lightning strike or wind or hail, those are the types of claims that they see there's a certain level of owner negligence involved, and they don't like to see that kind of stuff, right?
Hmm. So they should be advised to have coverage for their personal belongings, but they should be forced to have a renter's insurance policy with minimum 300 to
100%. If you
500,000.
don't have that in your lease agreement, you have a hole in your lease agreement. Yeah. And you want to be named as an additional named insured. You want to be notified if there's any kind of changes or, non-payment of premium that causes that renter's policy to lapse.
And say that they do have something go haywire in the home, like they don't protect the pipes when it's freezing weather and a pipe burst. What if they don't want to file that claim? How does that process work? Can you force them to file a claim with their renter's insurance, or do you as the homeowner, are there situations where you will have to file the claim and then your insurance will subrogate to them?
Yeah. The latter could be true. Um, I really don't know the answer to that. I would assume based on, I have to kind of use some deduction here. So if you make yourself, or you're required in your lease agreement to be the secondary named insured, you now have named insured rights on that policy. So assuming that I have that correct, then you should be able to file a claim.
Okay, so I guess that's the key point, is make sure you are listed as a landlord as the additional insured or the management company. Okay,
Yeah,
that's
check it
key.
with your agent, because I'm not 100%, but I think as long as you're a named insured or an additional insured, you should be able to.
So that might get you to navigate the waters a little bit quicker than forcing or expecting the tenant to do something on their own.
Yeah. Or maybe not necessarily your agent, but check with the company that renter's policy is placed with.
Sure. With all the changes we've seen in insurance lately, like everything else, like the price of any goods or gas, or um, insurance has been hit as hard as anything else with inflation, as far as I can tell.
Yeah.
How do you navigate this with so many changes? And it's not unusual for, especially in Alabama, when we have a tornado come through every 10 to 15 years, that certain insurance companies will just drop all their rental dwelling policies overnight, and then the homeowners who have these investments are left just shopping around. How do you navigate this, and how can you be prepared for all the changes and the inflation and these high premiums that owners are paying now?
Yeah. I always found that interesting, because we heard about like that tornadoes came through, and, carriers, I think Alpha was one that I heard a lot about in like 2011, just dropped tons of people overnight, which is honestly doesn't make a lot of sense statistically, because just because you have two tornadoes hit back to back, even though that's statistically unlikely, it doesn't change the statistics going forward. There's no, I don't really see the point in that. It just seems like a kind of a knee jerk reaction to, and kind of like a fearful thing. But Alpha is a regional carrier, so that is, they probably did shake somebody up high, and, they didn't really make a good business. Anyway, I digress.
They're not the only ones, though.
Yeah,
I've personally experienced being dropped overnight because XYZ company decides we're not going to cover these landlord rental dwelling policies anymore.
that's true. Within the last few years, there were a lot of carriers left the market. Landlord market here in Alabama was something. I didn't see a ton of it happen on the home side, but yeah, there's some of the carriers left, like Progressive for one. They just dropped everything, all their DP3s. I had one with them actually on two of mine, and I had to find something else.
Yeah. Is there any way to prepare for that, or is that just something you have to go with as an investor?
Yeah, that's kind of what carriers do, is they underwrite, right? And they assess their risks, and they reassess them as time goes on. And sometimes they tighten up, and sometimes they loosen up, and sometimes they leave the market altogether. I mean, we're seeing a lot of that. We saw a lot of that in California with all the fires. I think for a long time, State Farm couldn't get the rates they wanted through, the state insurance commission. Um, but they had their lizards, so
Right.
they saved the lizards. But anyway,
It's something you should always be prepared for. And if you have a mortgage on the property, the lender is going to require that you show proof of insurance at least once a year. So it's not like you can just totally ignore it.
Yeah. Right, right. No, you have to get it to satisfy your obligations to your debtor. That's a must have. So that's another good point as to why you need that DP3. Um, yeah, but carriers leave the market, and the only thing to do in that situation is you got to see what's still available for you on the market. Um, it does help a lot of times to have a broker or a independent agent, um, because they typically have a lot of carrier options and they're familiar with your policies. They know how carrier A affects your coverages with carrier B. If you've got, say, for instance, an umbrella policy, some umbrella policies or most of them have like restrictions on the underlying policy and it's, coverage types and coverage limitations. So if you may have like, Allstate homeowners insurance and a personal umbrella policy and Allstate auto, but you've got a property in another state that you are, using as an investment and it has a certain coverage on it. And then there's a claim that happens and you're getting sued for $500,000. You may find yourself in a position where your umbrella policy is not going to cover it because the underlying policy didn't have the right, conditions and criteria. So having an independent agent will help in that, keeping all that kind of integrated. That way, you don't run in, or you're at least less likely to run in that kind of situation. There's still instances where you could sue the agent, like errors and omissions, and probably be safe, but you don't really want to have to find yourself in that position, because that's not foolproof. There's that you may not win that lawsuit, right? And it's also a big hassle, right?
Right. We had Jeffrey Middleton of Middleton Law Firm on the show, and he discussed the importance of having both the insurance and the protection from an LLC or some sort of entity standard. You can't just have the insurance or just have the entity protection, the LLC protection. You really have got to have both of these.
Yeah. Yeah. True. An LLC is a good way to go. I mean, it comes down to like personal needs and portfolio size. I guess what the LLC, if you get sued for, that LLC is its own individual, so to speak, and if that person gets sued, you can't be sued as a person. So if you have a personal umbrella policy and your real estate portfolios in an LLC, your personal umbrella policy is never going to come down and provide you additional coverage. So in a situation like that, you would need GL, like some kind of additional commercial, like supplemental liability insurance is another one that I see a lot, especially for rental properties. It serves similar to like a GL, same concept.
All right. So even though an LLC is meant to separate the entity from the individual, you don't want to go it alone without having insurance
Sure.
over the property. That, yeah.
Yeah, yeah, you definitely need, because they're gonna for the loan, yeah, they're gonna require you.
But if you're a cash buyer,
Yeah, well, if you're a cash buyer,
it'd still be foolish.
yeah, you protect your investment. Like I said, it's one of the best things about real estate, as a equity. It's insurable. Your risk is you can buy it off. You exchange a bit of money to buy away your investment risk. That's it's basically as simple as that. You're paying down or you're paying for that risk to transfer to this company, which makes it less risky.
At
But
what
it comes
point?
at a cost.
Right. At what point does a strategy change for an investor who has a portfolio of homes that are paid for? There's no mortgages. At what point do they form a different strategy insurance wise than they would if they had mortgages on 70 to 80% of those homes?
I mean, you're kind of asking me to speak a little bit to the risk aversiveness of an individual.
Sure.
But I think in that case, probably somebody already has a pretty good insurance solution set up. But I think that you're gonna do something like, some sort of commercial policy. A lot of companies will do multiple properties on one policy, which is a nice thing to have. You usually get a little better rate than that doing it that way. But I still think you're gonna want some sort of supplemental liability to go in exceed of that, in excess of that. And then on your personal side, I mean, technically you could still, I think, cause a bad car accident, and then get sued for that. And maybe you don't have enough personal liability coverage. I don't think that that makes your LLC assets off limits. I'm not sure about that. Check with an attorney, but I think that it doesn't, it's kind of like a two-way street, right? You may have your personal assets covered because your rentals are all in an LLC, but if you're in a personal lawsuit, does that protect your LLC assets? I don't think so. But so having the right coverage on your personal side of things is also important because, car accidents could get really, really bad. And all of a sudden, your entire real estate portfolio is at risk, even though you had good coverage on that. You didn't on your personal side.
Whether it's an intended strategy or not, some carriers are going to force you to go to make changes. For instance, some carriers are not going to write more than 4 to 6 uh, policies, and then at that point, you have to go shop it around, find, put it in a commercial line, things like that. So even if it's not an intended strategy, insurance is something that's going to change for every investor. When you start developing a portfolio of homes, of properties, it's going to be something that you're going to have to give some time to.
Yeah, yeah, you definitely do. And that's another good reason to have an independent agent or a broker because they have options and they're able to look at your entire insurance, situation and kind of give you the right analysis how things are going to kind of work cohesively together, both on a personal and a commercial side. You're right. A lot of companies don't accept more than just a couple. A lot of companies won't accept any if it's named in an LLC as opposed to an individual or even sometimes a trust. Some companies won't take that if it's in a trust name. A lot of people have trust set up or, a rental property like mine. I don't have an LLC, but I do have mine named in a trust, so certain carriers won't take that. They look at it as once you get to a certain limit or once you have them named a certain way, even though it's technically a commercial policy and the fact that it's a landlord designed DP3, they still kind of consider it a personal risk. And once you start getting out of the personal risk appetite of very well known personal line carriers like State Farm and Allstate, Country Financials, one we have here, Alpha, these common personal lines carriers, they tend to not like that kind of thing.
Or they will only take your property if you're giving them your auto as well. Like
Sure.
it's
Yeah.
a package
Yeah.
deal. And then that's when it gets
Yeah.
really frustrating for me as an investor. Insurance is the most frustrating part of,
Can
of
be.
it that I deal with because sometimes I can get some great rates. I get some great quotes on the property, but oh yeah, we got to have your automobiles, but the automobiles are not such great rates. And it kind of negates the benefits from the property quotes that I received. So it can be very frustrating. And then they find out that there's maybe too many properties. They can't cover they at that point they're just completely out. So
Hmm.
to me, in my experiences, it has been the most frustrating part of investing in real estate.
Yeah.
But I think it's what's important to have this is to tell the listeners that this is going to be something you're probably going to struggle with at some point, and you need to have a plan and be prepared to attack it.
I'd argue that tenants are the most frustrating thing in real estate investing, but
I completely disagree.
maybe that's because I know the
I don't
insurance
have
side.
half the problems from tenants that I do with insurance.
Yeah.
You mentioned earlier in an example of a dog biting somebody, a dog belonging to the renter. How are these treated these days? Because now we have ESAs, emotional support animals.
Yeah.
And, 15 years ago, as a landlord, we could use the excuse, you can't have this Doberman Pinscher, this pit bull, because they are going to be on the exclusion list from insurance companies. And the homeowner's insurance will not allow you to have this pit bull. But now with emotional support animals, it's a different ball game. How do insurance companies look at this, or did they just ignore these aggressive breeds altogether?
Yeah, you stumped me on that because I've never ran into a situation where a policy was rejected because of an aggressive breed, which does happen. We can say no on the application all day long, but they send an inspector out and they think a vicious dog jumps up in the window, like they write it down and they reject it, and that's the end. Usually underwriters will not. They don't care what the reason was. Oh, I was dog sitting for my neighbor. No, no, we don't care. We're not taking this policy.
So
So
they still do get
yeah, as far
rejected.
as I know, I've never ran into that situation. It's a good question because there are certain laws that protect, service animals. I don't really know a lot about that. I do know it exists. I've had it in a situation with my rental with my Airbnb where I had to permit someone with
Sure.
like a, some dog that I didn't want to. She's like, well, no, she didn't want to pay the fee. I was like, we have to pay the fee. She's like, well, no, I don't per the law. And I was like, okay.
Right. It's a disability and it's not a pet. It's an assistance to.
So the insurance angle, I don't know. I would think that they would have to make concessions as well because it's the law. That's a good question.
I would think it'd be difficult. I also think it's something that's really hard probably for insurance companies to navigate is what do we do in this situation when someone is bitten by an aggressive breed animal that they would have restricted or maybe do restrict, but then you get into this area of how can we restrict it if it's an emotional support animal and that person has a right to have it.
You know what? I feel pretty confident, even though I've never dealt with this situation, that, if you find yourself in a situation where an insurance company is saying, no, we saw a pit bull on your property, we're not taking it, and then you had it documented and trained as a, service animal or whatever, they're probably going to make that concession because also it kind of goes with that, okay, this is a dog that has a certain level of training, and with that comes a certain level of trustworthiness that it's not going to be the same liability risk as, you know, just any random dog, right?
Sure.
So I don't know though. It's a good question.
Well, what's some general advice you would give to a potential investor of how to navigate the insurance aspect of things? Is there any pros, cons? I mean, it's something they really have to do. They don't have to, but they really need to do it. But what is the general advice you would give to somebody?
Find a agent local to the area, that has local carriers, understands local underwriting, because underwriting, even with the same company, varies a lot state to state, region to region, even zip code to zip code. You know, zip code is a rate factor. So, I mean, there's what, 12 here in Huntsville or Huntsville
Something
area?
like that.
Yeah, so I mean, it could, the same exact house could cost a different price halfway across town. It could be a lot different. Um, so yeah, working with a local agent is probably a good advice. Working with a local broker, especially if you're out of town, is better advice. Like, independent agent broker. Don't go to State Farm, Don't. There's nothing wrong with State Farm. Well, in that aspect, there's nothing wrong with State Farm, but you know, they're just not going to have you. They're not going to be the. They're not going to have the right appetite that you need. They're not going to have the right products that you need. They're not going to be able to, you know, well, they will, but it's just your odds are better. The odds of getting a good rate are better. The odds of getting, all the underwriting or all the coverages you need are better. Whether, you know what I'm saying?
Yeah, do you agree with my theory that the larger the marketing money spent, the less likely that company is going to pay out a claim?
Well, that's overhead. They're spending if they're not spending it on claim, or if they're spending it on, Drake, then they can't pay it to a claim.
I mean, if you watch the NBA playoffs, you're going to see insurance companies, and those are the ones that, in my experiences, I can tell you personally, they don't pay out.
Yeah.
You're not going to get a claim.
So, when I was an Allstate agent, they were pretty bad about roofs. In my 4 years and 2,500 policies in force, they paid zero roof
Say
claims.
that again.
Zero,
They
none,
were,
not one. They would always find some way to get out of it. They'd send out an adjuster and say, well, we only need to replace shingles here, here, and here. One of the more crazier ones was this woman had pretty substantial hail damage, and sent an adjuster out, and they're like, no, that's not hail damage. That's what is it called? Blistering, which is when water gets underneath the shingles and gets hot, evaporates, expands, and bursts through the shingle. And they say that as a workmanship issue, which is all true, but them being able to kind of deduce it and tell if it was blistering, it looks a lot like hail. And then what was more funny was there were even little divots on the gutters, and they said, no, we think somebody came in with a ball peen hammer and banged up the gutters to make it look like hail damage. Because if you look at this certain height on the home, you don't see any more at a lower level. Which maybe that was true, but man, that was some good detective work by that adjuster. But I just think that what I've seen out of stuff like roof claims, or on, for instance, on the auto side, uninsured, underinsured coverage is something that companies tend to not want to pay. That tends to be some, if you're in an auto accident and you're hurt and the other guy doesn't have any insurance, you have uninsured, underinsured to cover you. They tend to not want to give you a lot in those situations. People tend to have to lawyer up. That's why you see so many billboards, and that's why there's so many personal injury attorneys nowadays. That I just think that my theory is that these companies, they look at their data, and the data shows that they save money when they deny claims and force people to get litigious with them, you know, as opposed to just paying out the claims. So they're willing to accept the risk that you're going to sue them and get more money than they would have just paid out, because the amount of people doing that is so small that it shows higher profits for them. That's what I think is going on.
They
because
do a lot of
they're all about crunching data. Why not look at that data?
actuaries,
Yeah, actuarial
actuarial
science.
work, and it's hard to argue.
Mm-hmm.
It's hard to argue what you just said.
Yeah, yeah, yeah. But I mean, if you just go ahead and sue them, you're probably going to win that case. There's the burden of proof is on them, not you. And it's a contract of adhesion, an insurance contract, meaning one party writes it, and the other party just signs it. Usually, when those things are contested, judges tend to rule in the favor of the party who did not write the contract.
It's a shame that it has to come to that, but I think anybody who's listening to this should be prepared at some point that that might be a decision they have to make. Because I think the idea that you're just going to get a claim paid out for any claim you filed, I don't think that's true.
No, a lot of them will try to weasel their way out of certain scenarios. Now that your house burns down, there's a fire. Those usually handled really well. They're very friendly. They're very concerned and empathetic with their situation. But if a windstorm came through and tore your roof up, then they don't want to. They want to get out of those.
Right, right.
Yeah, I don't know. I don't know. I guess they're both acts of God. I don't know what the deal is. But
Yeah.
I do know with Allstate, the year of the roof is a major rate factor with all companies. Allstate wouldn't substantiate that roof year. So a lot of agents around here are just writing everything with a brand new roof, trying to get them the best rate possible. We did it. Um, but with then the underwriting, they're not substantiating that, and they have to know that, right? Because it's such a big rate factor. So I think that they just are condoning or turning a blind eye to the fact that agents are writing everything with a brand new roof for a low rate because they're not going to pay them out anyway.
Right.
So yeah, a lot of situations where they're like, oh yeah, we'll just replace a few shingles here and there and there, and that's what you need to repair, and then that'll be $2,200, and that's what their adjustment will come back to. But you have a $350,000 house, and your deductible is 1 or 2% for wind and hail, so that's a $3,500 deductible at least. So it's not even going to cover your deductible.
Does you no good.
That was the thing, that's what they try to do.
Right.
When all likelihood, you probably do need a new roof.
If an investor is shopping around, having interviews with different agents, are there key questions they can ask? Are there statistics they can ask that particular agent that would,
Claims pay out.
yeah,
Hopefully you got an honest agent. You know, just you say, hey, in your experience, does this company pay roof claims?
is that the number one question you would ask
I
them?
think that was always my litmus test. Like, how does this company handle roof claims? Because that tends to be on the property side, the claim that they tend to try to shortchange people on. So some companies have a reputation around here of being good about that. Some companies around here have a reputation of being very bad about that. And like I said, I think it's intentional. I think the decision is made high up based on data. Yeah.
Absolutely. And you just hope that they're being honest with their answers. But there's just not a lot of numbers or statistics you're going to get out if you're calling agents. It's kind of a, do I feel like I would work well with this person? Do I like this person? There's just not a lot of, there's not a lot of numbers you can draw out and make a decision as you would when you're talking to other service providers.
Yeah, that's risk, man, because insurance people are salespeople.
Yeah.
And so you don't know if they're being honest or not because they're asked these questions and they've rehearsed these, they've said them, they've answered them before, and they can do it really well, So I don't know what to tell you. I mean, I wish there was a way you could, decipher that better, but you just kind of have to get lucky, I guess.
Well, we normally discuss single-family residential rentals, townhouses, condos, things like that. I don't get into a lot of commercial stuff, but I dabble a little bit in it. And with condo associations, large ones, those have been very difficult to cover for the last few years. And is it worth just telling an investor who might be going down those roads, the commercial route, that this is something you really need to be prepared for? It's going to be very hard to get coverage in some circumstances, and coverage is going to be through the roof, no pun intended, that it's going to make this acquisition not even viable.
Yeah. You're talking about like if someone wants to buy a whole building.
Right.
Yeah.
An apartment building or a building of condos, the game has really changed, and a lot of companies have completely gotten out of it, and they will cover maybe up to 10 million for the entire complex, and above that they're just out. Or you have to add on a wind policy
Yeah.
to the existing property they will provide, to the existing policy they would provide. So it is a lot to navigate when you get outside of just residential real estate.
Yeah, it is. You're right. A lot of carriers aren't doing that. Um, and then a lot of them will have certain limitations like, oh, no more than 5 buildings, and the building can't have more than 4 units, or no more than 6 buildings with 6 units. Stuff like that is very common, and it's definitely a commercial risk.
Or you're in a high
Somebody out
wind
there,
zone or a high
yeah,
crime zone.
yeah. There could be other things that knock you out. Somebody will get you written. I mean, there is, surplus markets out there, and sort of custom insurers like a managing general agency that kind of does case by case underwriting and comes with a rate. I mean, you're going to pay for it.
I can't stress how expensive that will be, though.
Yeah. Sounds expensive as I'm saying it. I'm like kind of in the back of my mind. I'm like,
I can tell you from experience,
yikes.
it's incredibly expensive, and it's an area I'm just staying out of right now.
Yeah.
It's all residential real estate for me right now.
Yeah. Yeah. Units are tough. I mean, the smaller, the easier, if you can kind of keep it to like a 4 unit building, or less, duplex, quadplex, even like 5 to 6 units is a lot easier. If you start getting into these like large commercial things, that's kind of tricky. So, I mean, it's out there. You can get insurance. There's tons of 20 unit apartments all over town. You know, but yeah, it's going to cost you.
Yeah, it's really going to eat into your cash flow, though.
Yes, yeah, and if you have vacancies, that's going to hurt. Yeah, that's what I always kind of yeah, and that's what always kind of turned me off to like multi-unit housing is just the vacancies, how quickly that can turn against you. You know. But I guess it also kind of, in a sense, it also can kind of even out your risk because you could have a vacancy, but you got 3 units rented, so you're able to cash flow profitably or at least break even in a situation like that. So I don't know, risk versus reward, I guess.
Sure. To wind things up, let's get your take on investing here in North Alabama in the 256. You've invested in homes. You're a rental property owner. Are you currently looking, or how are you assessing things right now in our current market, and what do you foresee happening here in North Alabama in the near future?
Sure, forecast, love it.
You
That's,
didn't
they
know you were
said
going to get that one today,
no,
did
I
you?
didn't. The weatherman said it was gonna be nice and sunny today, but
It's rained for like 3 weeks straight, every single day.
so I went for a run before I came here, and I almost got rained on, but it's supposed to be real nice today.
Yeah,
The market, Huntsville is, I kind of, I'm not gonna say bearish. I cooled on it for a while. Everybody, it was hot. We were getting a lot of growth, a lot of trends and signs for growth. And then COVID hit and work from home policies implemented, and all of the growth and people moving to Huntsville to work on the arsenal and things like that stalled. A lot of people didn't see that, I felt like, and so
rents
really,
went up though.
yeah, they did. They did. I think that it had an impact. Rents went up because costs went up. I don't think because demand went up. Well, I mean, it was hard to find. It's still kind of hard to find a place to rent. I talk to people that can't get in an apartment. So I still think there's maybe a good favorable supply demand situation right now for investors in this area. But I think it's going to get better because I mean, obviously the FBI headquarters is now moving here, so that's what 4,100 jobs or something like that, and they have families. Um, and then Space Force, I guess, is supposed to be coming from their base in Colorado Springs. I don't know how many people that is, but I think growth is returning to Huntsville. Is my point. I think as interest rates cool, demand for properties in this area more investors will be attracted to this area like they once were when rates were better. So I think that the future is pretty good. I think mostly because of the FBI and the Space Force situation. That's good growth. That's a 20-year, 30-year growth situation in my mind, as opposed to like some of these other things like interest rates. Okay, good interest rates might impact my real estate investment 5, 10 years down the road, but people moving to the area is going to protect my or impact my or leaving the area impact my investment 20 years down the road. And I think Huntsville has good leadership with Tommy Battle. I think he's got a good vision for growth and development in Huntsville. I think that you see a lot of things happening, like the what is it, Pin Creek Greenway thing that they're doing with federal money. They're building a bridge and they're making the drainage ditch into like a nice greenway. Things like that. Stovehouse development off of Governors. That's kind of a bit of a gentrification thing, if you will. You see a lot of that downtown happening, a lot of downtown investments going on. I think these types of things make Huntsville more attractive, and make it a good viable option for a longer term investment.
Right. Yeah, I tend to agree. John, thanks for coming in. We've really appreciated this. It's good insight from somebody who's been in the insurance business and looking at it as an investor like you are. It's that's really good stuff. I appreciate it. Thanks for coming back. Hopefully we can have you back sometime.
Sure, love to be back. Yeah, had a good time. Thanks for having me.
Thanks, John Wood. This is JD for the 256 Investor Podcast. My time's up. I thank you for yours.